So today's video, I'm going to talk about a really good question just received a few days ago from a developing trader. They were curious about what is the right approach to take at the beginning of your career in order to achieve consistency. If that topic interests you, stick around. Hey, I'm Steve Spencer from SMB Capital, and today I want to answer a question that we got from a reader of the SMB blog. So we received a note, which I will read to you. Hey, how are you? I'd like to know, in your opinion, which is better for day trader to be consistent? Trade and specialize in a unique stock future like the S&P and trade multiple strategies, knowing deeply this asset, or specialize one or two strategies and trade them in a lot of different stocks futures. Thank you. From Jonathan. The question from Jonathan is on what approach to take as a developing trader to become consistent as possible. And so we always, one of the things we talk about quite often is the initial goal is to become consistent. And once you become consistent as a trader, you can then scale. And ultimately, the long-term goal of all traders is to scale and get bigger. And so the root of their question is there one approach that can lead to consistency? And so the first part of the question was whether to focus on something deeply, for example, trading the E-mini. This is the S&P contract for the S&P 500. It's extremely liquid, and you can potentially, if you're trading the same thing every day, you can learn the nuance of it and get really good at it, and then implement multiple strategies or multiple setups, what we call building your playbook. I can tell you at the beginning of my career, I worked at a firm that traded, I think 5 or 6% of the NASDAQ's trading volume each day. And for those of you who aren't familiar, the NASDAQ is focused on technology stocks, or at least was in the mid 90s when I began my career. And so what I did for the early part of my career was I focused mainly on computer-related stocks. And I would group them into different sectors. And so there would be PC stocks. There was a group of them, a small group. There would be networking stocks. There was a small group of networking stocks, semiconductor stocks, chip stocks. And so I would learn those different groups. And I'd learn several stocks in each of those groups really well. And then by learning those nuances extremely well, I could then trade multiple setups in them and be consistent across those particular niches. Now, eventually what I went on to do, probably 6-7 years into my career, when volatility came way down, was learn this idea of trading stocks in play. And that's what we've been teaching ever since we started SMB. 14, 15 years ago. That's been kind of at the core of what we teach the traders on their desk and how we've built out a very large, successful prop desk. If you want to learn more about the techniques that we use to identify stocks in play, go to tradingworkshop.com, click on the link above. We have a 2-hour free workshop where you can learn 3 of the low-risk, high-reward trading setups that we employ for trading stocks in play each day on our desk. And so this idea of specialization is not that uncommon. When you learn something really deeply and learn something really well, once you learn that product extremely well, you can then go about building a playbook for that particular thing. In fact, we were discussing this with one of the traders from our desk earlier today, building up a playbook for trading one specific product. So that's absolutely a way to go. People will do that. And then the other potential approach is specializing in 1 or 2 strategies and then applying them across different products. So for example, just to give you the most basic vanilla example would be like learning to trade a breakout trade. And a breakout trade, whether you're doing it in the E-mini contract or the S&P, trading on the SPYs via, the SPYs is the same as the E-mini. It's just the ETF version. Or trading, Tesla, for example, today had really good production numbers and, had this big breakout up to move to the upside. You can trade a breakout trade, whether it's in a momentum stock like a Tesla or an Amazon or a Netflix, or it's the market overall, the E-mini contract or the SPY. And so the question is, do you want to just learn how to trade that breakout trade really, really well and do it across products? And some traders will do that. Some traders will trade gold, they'll trade oil, they'll trade the E-minis, these different futures contracts, and they'll learn the setups and they'll apply them across different contracts. Now, the reason why they do that is if you're looking, I just mentioned 3 futures contracts. Different futures contracts will not break out every day, or they will not have a support or resistance trade every single day. And so by going into multiple different types of contracts, that then allows you to find your setup more often. Now, here's the thing. When you're talking about just a futures trader, even when you broaden out across multiple contracts, or even if you're a futures trading, also trading equities and FX currencies, which that's the case. Some more experienced traders will trade futures, they'll trade FX, they'll trade equities. It's not a lot of people, but I know some people who do that, and they just have their very technical patterns, and they will trade them across different asset classes and pretty much trade them the same way based on the price action and how the pattern is developing in the volume, etc. I would say for us on the desk in New York, what we're really focusing on is having traders develop their playbook, which is basically patterns and catalysts that create those patterns, and learning those things and then scaling them to size. We do not dictate a trader having to, learn something really, really well. I think for myself, having done that at the beginning of my career, learning a specific group of stocks really well, it does work. But I think that the path that most will choose is learning setups and then finding stocks with catalysts, and those setups will trigger when the stocks have catalysts, and that is a way to have opportunity every day. It's very difficult if you're just trading futures contracts, specific futures contracts or specific stocks. They may not be in play every day, and ultimately, like as traders, we want movement, we want volatility, and that can happen in any given stock or any given futures contract on a daily basis. It just so happens because there are thousands and thousands of individual stocks, we're able to find every single day at least 3 or 4 that are very in play and liquid. There is no right answer to this. Ultimately, as a developing trader, you're going to learn setups, you're going to learn individual contracts. The simpler path might be for you to learn a few individual contracts on the futures side if you don't have the sufficient capital to trade equities at the beginning. And as you become more successful, perhaps you will then start to trade equities, which is a little bit more capital intensive. Hope you learned something. Hope this was helpful.